Hello investors. A few days ago, I read a wonderful interview by one of my favorite global strategists, Chris Wood of Jefferies. And he said that in case Prime Minister Modi loses the elections in May of 24, the markets can correct as much as 25%. He of course added that subsequently the markets will recover because the momentum is with India and it's a structural growth story. But the idea of a market falling 25% shakes you up a bit, makes you wonder as an investor that should you delay, should you postpone, should you wait for the corrections. But in politics, a lot can happen and a lot is unknown at the moment. We also have a few state elections that are going to come in the next few months. So what our team decided at Marathon to do was to do a deep dive into data and study the pattern and behavior of markets for the last 25 years. So when we analyzed the data, we came out with some amazing outcomes. And actually it gave us absolute clarity as to what should be your strategy for the next 6 months in a time when there's such immense volatility. So let me straight away dive into the data and share with you. In fact, the outcome will be very, very clear to you. The first election we are looking at is 1999. So just to give you a background, prior to 1999, we had a lot of coalition politics, jod tod ki sarkar as they would say, and the people were quite fed up. They voted for a strong, charismatic Prime Minister, Atul Vajpayee. And what you can see is that on the result day, the Sensex was at 4,697. However, 6 months prior to that, it was at 4,042. So actually an investor got a return of 16% in 6 months even prior to the election. And why I have taken 6 months is because where we are today is almost 6 months prior to the election. So we've actually broken it up into 6 months pre-result date, 6 months post-result date, and what was the story over 1 year. So as I will repeat that on election day, the Sensex was at 4697, but 6 months prior to that, it was only at 4042. So investor actually made very good returns pre-election or pre-result. Post that, in the next 6 months, if you had invested also on result day, the 4697 had moved to 4866, which is about a 3.6% return. So interestingly, very often the markets are excellent discounting mechanisms. But the most important column is the fact that over 1 year, you had made a 20.4% return, which is a fantastic return, considering that you had a very big event risk. Why I'm taking 6 months, as I said, is that we are in a 6-month run-up to the elections. Why I'm taking 1 year is that as a PMS investor, obviously your time frame is multiple years. But when you want to top up, add up, you hope that you have some positive outcome 1 year from now. So clearly 1999, I think both 6-month phases were good, and more importantly, 1 year later, you were sitting on a happy 20% plus return. The next election, I think, is the most interesting election we've had, especially from the market's point of view. This was 2004. The markets were on a high, and we had this whole India Shining campaign led by Jaswant Singh for the BJP. The exit polls also showed that the Vajpayee government will come back to power. But I think due to some very, very clever maneuvering and alliance politics by Sonia Gandhi, there was a surprise. And you had the formation of a UPA-1 government. And I remember that result day was probably one of the worst result outcomes for stock markets. The markets went into downside circuit. In fact, we had a 25% kind of correction immediately on results. And dare I say that when Chris Wood takes a number of 25%, which was the inspiration for this research piece, he pretty much would have jogged back to this point in time. So we really had a very, very sharp fall. The interesting point is that on result day, the Sensex was 5,399. As I said, it fell 25%. But more importantly, by the end of the year, the investor still made a 20% performance return. So that is the key thing, that outcomes in politics are really unknown. We can talk about it, we can have our opinion, we can have our biases, but the fact is nobody knows. Surprises happen, and sometimes even continuity happens. But more importantly for us as investors, if we have that kind of time frame, you will realize that the returns were delivered by the market in spite of a 25% 2 circuit down days post elections. So this really tells you that if you have a certain time frame, which I would say minimum be able to withstand volatility for a year, I think that the markets repeatedly show us that the outcome tends to be positive. The next is the 2009 elections. This time Manmohan Singh had done good work in UPA 1, and even the BJP really had not got its act. They didn't have much of a new face. Advani was the Prime Minister face, and the people voted for continuation. This was also the time of 2009 where you will realize that after the financial market crisis, global markets were on an up move. And on an election result day of 12,173, you will realize that 6 months after that, we were at 17,000. And if you really invested 6 months prior to that, which was at 9,385, you saw very good 30% return pre-election and almost a 40% return post-election, giving us a cumulative return of almost 80%, which is phenomenal. However, it also brings us to the point that we should not look at one event in a very secular manner. We only take elections as a variable. You can see that this was actually the power of global markets. Global markets were on such a revival path that you returned 80% plus, which is fantastic by any standards. So we should not get too obsessed with just elections. I think there are many other variables, and as we have laid down earlier in all our discussions, that we are very, very optimistic and bullish about global markets. So I think that this also drives home the points that let's not be obsessed with just one event. The markets have many more variables, and the end is good. All's well that ends well, and this year also it ended well. 2014, another watershed year for Indian politics. The UPA 2 had a lot of issues, a lot of scams, politically very weak, almost a lame duck government. And then you had the BJP putting up a new candidate in Prime Minister Modi. Modi came back with the strong numbers, an absolute majority government, and the market again rewarded him. As you can see, in the run-up to the elections, pre-election 6 months, the market returned 18%, and post that another good 16%. So you had a healthy 37% return if you had invested exactly 6 months before the elections, and on a 1-year time horizon, you got that kind of returns. Next, to 2019, again, the market voted for continuation. Of course, you must remember that we were coming out of demonetization and GST, so economically things were tough. The ground reality was tough. The economy was going through a difficult phase, but more importantly, a phase of revival and repair. In this difficult times also, you'll realize that 6 months prior to election, the returns were about 10%. Post that, a muted 4%, but yet the investors were able to take out or extract a 15% return. So I want to just summarize by showing you this slide, that all in all, we have analyzed 5 elections, different stories, different outcomes. As they say that history does not repeat itself, it often rhymes. This time also it will be different. The politics are different, but repeatedly what is coming out is that which gives us clarity as to what is our strategy and what should be your strategy, that do not get distracted by these events. If you are playing for India's larger secular structural growth story, you will experience volatility. You will experience a lot of discussion, a lot of talk, a lot of controversial stuff happening in the next few months thanks to elections. But the last 5 elections, 25 years of data shows us that net in each instance, the investor has walked away with handsome returns. These are all above average returns. So I would just like to, as I said, as a strategy, we don't know what's going to happen in these elections. Nobody knows. Neither do you know, neither do I know, neither do the candidates know. So net, we are all blind. Our job as investors is to look at history and see that is it a year of opportunity? Do these 6 months or the period prior to the election cause a wait or invest? We think that if you can withstand volatility for 1 year, which is the minimum time frame that you must have, I think that hopefully, fingers crossed, we should have another good 1 year return. With that, I leave you for this month. Thank you.